Good morning, Paul Georgie from Allendale. It's August 27th, Tuesday morning, and weather still a major feature in trade attitude this morning. Looking at the weather forecast this morning, they've added a little more rain to the northern corn belt here in the 1 to 5 day and 6 to 10 day, and then in the 11 to 15 day period. There's actually more rain than thought of yesterday. At noon yesterday, we were looking at 0 rain for the next 15 days. So a little more rain, but still very concerned about the high temperatures and how much damage to the crop that we are seeing this week before things cool off. Now, in the Chicago area, temperatures forecast are expected to cool down even as the highs being 77 degrees on Monday. So looking for some cooler temperatures next week for the northern areas, but still seeing some crop deterioration. We had the USDA's weekly crop conditions report yesterday, showed corn dropping from 61 to 59% in the good to excellent, soybeans from 62 down to 58% good to excellent. When comparing to the 5-year average, using the last 5 years, we're still above that percentage at 57%. However, when you take out last year's extreme drought, the average crop conditions for this time in the 5 previous years is 64%. So we are dropping below normal conditions and certainly taking off some of the potential for the high yields that farmers and traders were expecting. The other question I think that we're seeing here this morning, we've got most markets are off just a little bit on some back and fill, some profit taking, whatever you want to call it. But the question is going to be, will the funds come back and buy? Yesterday they were bought 30,000 contracts in corn, 23,000 in soybeans, and about 7,000 in wheat. So the question and that will move this market today, will they be back buying? Because that appears what we need to get this emotion continuing to roll to the upside. The cash trade yesterday, basis did slip. We did see some more aggressive movement of and sales of new crop corn and soybeans. We're hearing sales out of South America being very aggressive yesterday because of the weak Brazilian currency is giving farmers down there the opportunity to price some grain at exceptionally high prices, and the attitude from various analysts is that we will see soybean production increase dramatically out of South America. Brazil could see a change in production from 81 million tons this year up to 88 million metric tons of soybeans produced next year. So we'll have that to continue to adjust the market as we move forward here into their planting and growing season a little later in the year. The other news out of Brazil, the comments are that export sales have been running at an extreme high pace for commodities in general. Corn, soybean sales and shipments have been very good and at record pace for the first 3 weeks of August, simply because of the exchange rate. The currency decline in Brazil has allowed buyers, world buyers, to go there and buy grain. In the livestock trade, quiet markets yesterday after a rather bullish cattle on feed report, and that gives us an outlook for much better cattle prices as we go down the road. The estimates right now, if you look at the first quarter cattle on feed, we're looking at 21% below a year ago, which would be the lowest numbers that we've seen in many, many years. So look for some very exciting cattle market as we go forward here. However, the grain has taken the focus away from that here just in the short term, with feeder cattle being under pressure yesterday because of the higher grain prices. Choice beef down 39 cents, select up just 5 cents. Pork cutout values were down $1.35 yesterday, and a lot of the near-term pressure comes from retail buying here has ceased. They've got plenty of meat around going into the weekend. We may see some fill-in buying from various retailers here over the next couple days, but most are finished with their purchases for the holiday featuring. That is next Monday, so we expect some choppy markets here going into the weekend, and a lot of reasons to stay in touch with Allendale's research. Also want to remind everybody that we've got the Allendale August Ag Leaders webinar this evening. Don't forget to sign up for that and listen in live. Brad Rippey from the USDA Meteorology will be a guest tonight. And don't forget to fill out the yield survey. We've got a few more days left on that. So if you got any questions, give us a call, 800-262-7538. Wish everybody a very successful trading day. We'll talk to you tomorrow morning. Thank you.